This trade worked because I stopped overthinking the charts and simplified things for myself. My name is Bai. I document every trade I take and every backtest I run as I work towards consistent profitability using market structure, supply demand, price action analysis. In this video, I'll walk through a trade from my backtesting journal that reminds me of something simple but powerful. When price action gets messy, sometimes the best solution is to simplify your approach. First, we'll look at the higher time frame narrative, then the liquidity level that created the opportunity, and finally, the entry model on the lower time frame that led to the trade. Let's jump into the chart. Okay, we are here on the 15-minute, and I've turned the clock back just before New York session. We have a swing high and have broken structure to the downside, in turn creating a change of character and have put in a new low here. So we are bearish on the 15-minute order flow and have been retracing up the leg. Now, a lot of price action has occurred leading to the change of character to the downside. And as we open up New York session, I'm always looking for areas that make sense for price to visit and in reverse from in order to realign with the 15-minute order flow. Now, I'm trying to keep things simple. So there could be an order block here. There are a couple of fair value gaps. There's a couple of stacked liquidity that might require me to jump into a trade right away. But I want to wait for my New York hours to begin, which for me is after the opening bell at 9:30. So this key level is what I'm targeting. These stacked highs here, you can see consolidation of orders as well. And so I want to label this as my key level that I want to see mitigated, which coincides with London high here. Let's play price out to see what happens as we approach this key level. We see here a few minutes after the opening bell that we do have a mitigation of our key level. This is our signal to drop down to the 1 minute to see if we can find an entry confirmation. Here on the 1 minute, we can see that the 9:30 open is what pushes price above our key level. And so we want to see if we can find a 1 minute market structure shift, ideally below this level represented by the orange line. This is our key level because this is where we see the aggressive displacement to the top side that creates that mitigation of our initial key level on the 15-minute. Let's play price out and see what happens. As we can see, price pushes down and then comes back and actually liquidates this high. If we jump to the 5-minute, we can see this a little clearer and zoom in, where we can see right here that this high liquidates these equal highs. That tells me that price is being manipulated perhaps in a way that is taking any liquidity that was existing above these equal highs in order to facilitate our move down. At this point, this becomes our key level for sellers to break through. This is our key level because this is where the liquidation originates from. If sellers can break through and close below this level, they will overrun the buyers and tell me that we are ready to potentially continue to the downside in alignment with the 15-minute order flow. A few minutes later, we get that break aggressively with this down candle here. And so the question is, where do we find an entry? For this, I'll jump to the 5-minute. Here on the 5-minute, I'm looking at this cluster of orders, and I see a fair value gap that's been created. I'll place my entry at the bottom wick of this candle, which captures the fair value gap, and place my stops just above the highs. At the take profit, I'll target London low here, which gives me a nice 2+ R trade. Let's play price out. By the end of New York session, we've been tagged in, and price has tried to pull away a couple of times, but seems to be gravitating back towards our entry. This could tell me a couple of things, but since my thesis is that we are seeking lower prices, perhaps price is coming back to revisit and collect more orders in order to continue its move down. Since we're entering overnight hours, I would move my stops at this point to help protect my downside. I would probably move my stops halfway, just above these equal highs in case price wants to return back. This way, I don't lose my full risk. If price has completed its objective of collecting orders, I'm well out of the way before the move down. Let's play price out to see what happens overnight. And thankfully, the thesis holds because we can see that during Asia session, price once again visits this key level to collect more orders before aggressively moving down. We range a little bit more, but London session brings us back to our take profit for a nice clean win. The lesson from this trade was simple. When price action becomes messy or confusing, sometimes the best thing you can do is simplify your approach. Focus on key liquidity levels and let your rules guide the execution. I'm not a guru. I'm just someone documenting my journey to consistent profitability using market structure, supply demand, and price action analysis. If this breakdown helped you see the charts differently, then subscribe, and let's keep sharpening our edge together. If you'd like to see another trade breakdown just like this, then check out this video here, and I'll see you there.